It started as a quiet set of financial directives within India's Ministry of Finance. But what emerged, according to a new Washington Post investigation, could be one of the most explosive revelations in India's recent economic history. The report alleges that top government officials drafted and approved a $3.9 billion plan directing taxpayer-backed funds from the Life Insurance Corporation of India into the debt-heavy companies of billionaire Gautam Adani, a businessman often described as one of Prime Minister Narendra Modi's closest allies. This revelation, if true, ties together government departments, India's largest insurer, and one of the world's most controversial conglomerates, in a move that critics say blurs the line between state policy and private business. According to internal documents obtained by the Washington Post, the plan was drawn up in May 2025 as the Adani Group faced severe financial pressure. The proposal was reportedly coordinated between the Department of Financial Services, the Ministry of Finance, the Life Insurance Corporation of India, and NITI Aayog, the government's main policy think tank. The stated goal was to signal confidence in the Adani Group and encourage participation from other investors, even as global lenders and investors grew hesitant following a string of legal and financial challenges involving Mr. Adani. The documents cited by the Post show that officials advised LIC to commit about $3.4 billion to Adani's corporate bonds and another $507 million to boost its equity holdings in Adani subsidiaries like Adani Green Energy and Ambuja Cements. Officials reportedly justified the move by claiming that Adani's bonds offered higher yields up to 8.2% compared to the 7.2% yield on 10-year government securities. The intention, according to the report, was to restore market faith in Adani's empire after months of financial turbulence. The plan moved swiftly from paper to practice. On May 30th, 2025, Adani Ports and Special Economic Zone announced a $585 million bond issue to refinance existing debt. But what raised eyebrows was that the entire issue was subscribed by just one investor, LIC. This immediately triggered a political firestorm. Opposition parties and independent economists accused the government of using a state-backed financial institution, one managing the savings of millions of ordinary Indians, to bail out a politically connected conglomerate. Independent corporate finance analyst Hemindra Hazari, speaking to the Washington Post, called the move abnormal and dangerous. He noted that LIC's portfolio is built on the trust of India's working-class citizens and pensioners, warning that if anything happens to LIC, only the government can bail it out. Critics argue that this episode is a textbook example of crony capitalism, where powerful corporations benefit from government policies and public money. Tim Buckley, director of the Australia-based think tank Climate Energy Finance, went further, saying, Adani is allowed to operate by a different set of rules. Crony capitalism is alive and kicking. The Ministry of Finance reportedly approved the plan after internal coordination among the DFS, LIC, and NITI Aayog. Documents described Adani as a visionary entrepreneur who had shown remarkable resilience in the face of significant challenges. At the time this plan was being formulated, Adani's businesses were under intense international scrutiny. In 2024, the US Department of Justice charged Gautam Adani with operating a multi-billion-dollar scheme that allegedly misled investors and involved over $250 million in bribes to secure energy contracts abroad. Simultaneously, the US Securities and Exchange Commission filed civil fraud charges against Adani and his nephew, Sagar Adani. The Adani Group has repeatedly denied all wrongdoing, calling the charges baseless and politically motivated. It has maintained that the alleged misconduct pertains to individuals, not to the corporate entities themselves. This is not the first time Adani's empire has been in the spotlight. In 2023, a report by Hindenburg Research accused the group of stock manipulation and accounting fraud, triggering a massive sell-off that erased billions of dollars in market value. India's securities regulator, SEBI, dismissed two of Hindenburg's allegations, but several inquiries remain open. At one point, LIC's own holdings in Adani companies had lost an estimated $5.6 billion in paper value, though some of those losses were later recovered as market sentiment improved. Despite these events, the Modi government has continued to back major Adani-led infrastructure projects, citing their importance to India's national development goals, from renewable energy and logistics to ports and airports. The Washington Post investigation also highlights the geopolitical dimension of Adani's ventures. One key concern is Adani's stake in Israel's Haifa port, which has recently faced security threats from Houthi rebels in the Red Sea. The report notes that Indian officials were aware of the geopolitical risks associated with such assets, yet viewed them as strategically valuable for India's expanding trade footprint. Meanwhile, opposition parties, including the Indian National Congress and the Communist Party of India, have long accused the Modi administration of favoritism toward Adani, claiming that state resources and policies disproportionately benefit his conglomerate. Congress spokespersons have called for a parliamentary probe into what they term the systematic misuse of public funds through LIC. Following the Washington Post's publication, the Life Insurance Corporation of India issued a formal statement denying the report, calling it false and misleading. LIC said that its investment decisions are made in compliance with strict internal policies and regulatory norms, and that it invests across multiple corporate groups to ensure balanced risk management. The Adani Group also responded, saying that it had no involvement in any alleged government plan to direct LIC funds, and that its relationship with LIC was based purely on market-driven investment principles. Neither the Ministry of Finance, the Department of Financial Services, nor the Prime Minister's office commented publicly on the allegations. For many analysts, this controversy raises a deeper question. How much influence do powerful corporate groups wield over public financial institutions in India? LIC, which holds over $500 billion in assets, plays a critical role in the country's economy. Its investments affect everything from government borrowing to public infrastructure. The potential use of such an institution to stabilize a single business empire, no matter how large, could have long-term consequences for both financial transparency and public trust. The LIC Adani story is still unfolding. What's clear is that it sits at the intersection of politics, business, and public finance, a space where transparency often blurs. Whether the Washington Post's claims hold up under scrutiny or not, the controversy has already sparked debate about accountability, corporate influence, and the protection of citizens' savings. In a democracy that prides itself on economic growth and global ambition, this case serves as a reminder that trust, not just capital, is the true currency of progress.